What's the difference between a standard and an itemized deduction? And how do I know which one to take? Next. Hi, I'm Alison Eddings. I'm a CPA in private tax practice with over 20 years experience taking care of my business clients and individual clients' tax needs. So today's topic, what is an itemized deduction? What is a standard deduction? What's the difference? Is that my business expense? No, that is not your business expense. I have a lot of people think that their business expenses are itemized deductions. They're not. Now, when you think of the word itemized, that means it's a listing, right? So in that case, you do itemize what your expenses are for your Schedule C or other business expense, but it's not an itemized deduction. Itemized deductions are listed on a Schedule A on your 1040. It's always going to be A. Fun fact right there in the corner. And you can either have a standard deduction or an itemized deduction, but not both. And if you have the standard deduction, it doesn't mean that you can't take your business expenses if you're a self-employed person. So the standard deduction for 2021 for a single or a married filing separate person is $12,550. So let's say you were single and your itemized deductions were less than that, you would take the standard. And it's automatic in the software. And your preparer automatically knows which one to do. They might, I think this year I might actually do that. I have an option to turn on that the itemized deduction will print in your return so that you can see it, like the page, but it's not claimed unless you need benefit from it, just so that people can see, because I sometimes get that question. I usually run them through it. Oh, your mortgage interest was this, charitable donations was this, it was less. Because Tax Cuts and Jobs Act, I'll call it TIGDA. After TIGDA, the standard deduction went up much higher. You'll see that get peeled away very shortly. It's twice of what it used to be, and that's probably going to go away. Most tax law does what they call sunsets. It just, when the sun sets on it, it's gone. It's over at the end of the day. The married filing joint standard deduction for 2021 is $25,100. So if you're married filing joint and you file that way, that's what you have to spend in excess of that for the standard deduction. And head of household is $18,800. I'll link to the video on filing statuses so that you can have that easy access. But the things that are itemized deductions include your state and local taxes capped at $10,000. This is a fairly new thing, again, with TIGTA, that previously you could deduct all your property tax, all your, if you had antique cars and motorcycles and all this stuff, and you paid more than $10,000, you could deduct all of it. But it's been capped with TIGTA. And there's many states that have been trying to figure out ways to get around that. Haven't had a whole lot of luck. Most of them in the New England areas trying to find ways to pay into a trust instead of calling it taxes. It's still taxes. So taxes that you paid limited to $10,000, state and local, not federal taxes, state and local. So like property tax on your house, on your car, on your boat, on your motorcycle, on your, not on income producing property. Your rental property is going to be different, not income producing. The interest you pay on your primary home, subject to certain exclusions. Now, most people are not going to hit these subject to certain exclusions. They exist, and that's why I'm saying it. Let's say you bought a house for $300,000 and you financed $300,000 worth of house, right? You can deduct that interest on that house. But let's say you took out a second mortgage to pay off credit card debt. That was not used for the primary purchase of your home. That was to pay off credit card debt. So you can't deduct that second mortgage interest. So there's limits to it, but that's a simple way of explaining it. And it's capped at certain values of home. But for the most part, home mortgage interest and points. Look on the 1098 INT from your mortgage holder. A lot of people pay points and don't realize it. I probably had like 5 people last year that I did returns for. I said, "Did you pay points?" They said, "No." And I checked it. You paid points. That's when you're buying down your interest rate. And some people just don't even realize that they're doing it. I just, there's so many disclosures in buying a home, but it just sometimes slips through there. So other investment interest, really kind of rare, so I'm not going to get into that. Charitable giving of cash is an itemized deduction. It's also on the front of the 1040 for this year and last year for 2020 and 2021. Won't be there for 22 unless something changes. It's always changing. I can't tell you today it won't be there. But for right now, it doesn't exist. But it was $300 last year and $600 for 21. But charitable giving, if you gave more than that, it's an itemized deduction if all these add up to more than what your standard is, right? Casualty and theft losses, but it has to be a federally declared disaster. So let's say that, I live on the East Coast, and so we sometimes get this because there'll be a hurricane that comes through and it'll rip off some shingles on a house, and it was a federally declared disaster area. Insurance didn't significantly cover it. That's a casualty loss. You don't normally see a theft loss that's in a federally declared disaster area. You have theft losses, but not tax deductible because they're not in federally declared disaster areas. The other 2% itemized deductions, those were eliminated. People get really excited about those miscellaneous job expenses. Not going to do you any good. And now I'm going to go to the most challenging one, the medical and dental, because that is subject to it moves. People ask me every year, what's my medical deduction? What's my medical? It moves every year because it's based on your adjusted gross income, which is a term I won't really get into all the ins and outs of it, but just let's say your income, because that's a rough number. When you look at your total earnings and net business income and all that, 7.5% of that. So let's say that gosh, I'm really bad at math. I should have done this at first before, put some numbers on there. Let's say you make $100,000 adjusted gross income. 7.5% of that would be $7,500. Is that right? So the amount in excess of $7,500 that you spent on medical is deductible as an itemized deduction, assuming that it all adds up and is in excess of your standard. So let's say you made $100,000. You spent $10,000 on medical. Only the amount over $7,500 is deductible as a miscellaneous or as a medical expense as an itemized deduction. So you can see where it would be it kind of gets hard to hit the itemized deductions for a lot of people right now because the standard is so high. But that's going to go away. So don't get comfortable not itemizing. It's going to come back. It's going to come back. And so just keep up with your mortgage interest. Keep up with your charitable giving. Keep up with your medical. But the easy way to keep up with your medical, honestly, is to either just pay for it all out of one account or look at your EOB at the end of the year if you run everything through insurance. I will make a point of doing another video on how you can, if you have an HSA, pay for all of your medical tax-free. All of it. All of it. Wouldn't that be miraculous? If you didn't have to pay taxes on anything you paid for medical? Okay. Teaser for that one. If this content is useful, helpful, informative, educational, entertaining, whatever, just like the channel. I would really appreciate it if you'd like the channel. That tells YouTube to push this out to more people so they too can pay for all their medical with tax-free dollars. So take care. It's good to see you. Bye.